So picture this. It's time to gather all of your information to do your taxes, and your CPA needs your business income and expenses. You hadn't really been bothered to keep things separate, and when you hand over everything, you find out it's going to take extra work, extra time, and expense to separate everything out. Not only that, but you're not taking advantage of all the deductions due to everything mixed together. You realize that you're shortchanging yourself, and what's more, you're inviting an audit, and it's hard to tell what your business is really making. So what's a time-poor professional to do? I'm here today with Sue Schnitz, the founder of Perfect Balance CPA. Now, Sue, this is, I don't even know how to describe it. I was going to try and make up some term for it. It's not even the perfect storm. It's just the perfect nightmare, isn't it?
Yes, it is. When you commingle your personal with your business, you create all kinds of issues. The issues start with that the government can say, well, this isn't really a business, it's really a hobby. So you don't want that to happen. But in order to manage both, you really need to keep them in separate buckets. It's as simple of thinking that your life is like a bucket. You have your business bucket and you've got your personal bucket. And they're both very important to each other, because if you're not managing your business, then you can also not manage your personal. So if you're going to start a new business, it's always a really good idea to keep the job that you have so that you can afford to pay for your mortgage and your health insurance and the electricity and the gas in your home before you start that business up and running full force. So at that point, it's really a good idea to think about getting the separate bank account and the separate credit card to run your business. This way, you're not commingling your funds and you can keep track of your deductions. So for example, if you decide to start a business and you've already paid for things personally, it doesn't mean that you're going to get a detention or going to get in trouble. What you need to do is just write a check from your business to your personal so that you're moving it from one bucket to another. And that way, you've got a really good idea of what you're spending personally and what you're spending in the business. It sounds like that's a lot of work in the beginning, but it's really important because the busier you get, the less you're going to remember.
Given this crucial need to separate your business and personal finances, there must be some steps here which I can see, that people really ought to bear in mind, almost to kind of treat as a critical checklist. Would that be right?
Yes, it's really important. The first thing that you want to do is to form the legal entity. So if you're going to have a partner, the first thing you want to do is to meet with a lawyer. Don't meet with a lawyer who happens to be your next door neighbor. You really need to meet with a business lawyer. I've had clients that have used their neighbors or their friends to put together their management agreements. And when things didn't work out and they needed to get divorced from their partners, they had to spend more money in order to get proper documentation and legal work done because the neighbor really didn't have expertise in that area of law. So I can't impose on you enough to get a proper, I call it prenup, with your partner, which is your management agreement when you start your business. You also want to decide what kind of entity you're going to be. There are all different kinds of entities and you want to look at it holistically. The easiest entity to be is just a Schedule C. But if you're worried about legal liability, you can be a one-member LLC. And then if you're a two-member LLC, you would file as a partnership or you become an S Corp and sometimes a C Corp. But definitely get professional advice before setting that up. Don't listen to the news when they tell you that C Corps pay less tax because they're talking about really large corporations and it could have a negative impact on you when you're a small business. After you form your legal entity, then you will get an EIN number from the IRS, and with that, you can go open up your separate bank account or business checking account. You want to keep everything separate. If you decide that you're going to have office space in your home and you want to have a home office deduction, that has to be used exclusively for your business in order to take the deduction. And then you want to keep your files separate. So if you're using a credit card and you have another credit card that you don't use very often, then maybe just use that one for business and use the other one for personal personal. You really want to keep them separate. I am not a big proponent of debit cards because I feel like the bank is the winner on a debit card. I would much rather play the miles game. So I highly recommend to my clients, go get a credit card with cash back or miles and use that for your business. And then it's also really easy to track your expenses as well as giving you 30 more days to pay your bill. So that's how you really want to start up and keep everything separate.
That's absolutely golden stuff there, Sue. And it does ring a bell in one respect that sometimes business owners can become a little bit too zealous and they go for some kind of whiz-bang credit card that costs them a lot of money, even though it has some fancy looking perks, right?
Correct. Just get something that will either give you miles back or will give you cash back. Whatever you want. If you like to travel and you take a certain airline, you may want to get that credit card. Or if you are more concerned about getting money back, then definitely get a cash back card. But don't go for the $450 or the $1,000 black card yet. Just wait. Hopefully in time, that'll be something you can afford. But in the beginning, you just want to use it as a tool to keep everything separate.
So, business checking. Could you talk to us about that for a minute, please?
Well, there's all kinds of ways to have money in the bank. Some people use a credit union, some people use bank account, but I highly recommend opening up a checking account and a savings account separate for the business. The hardest part to remember going from an employee to the employer is that you are now responsible for your own self-employment tax and federal income tax. You will no longer be having someone withhold that on your part unless you're an S Corp, which is a different story. So most people will be an LLC or just a single member LLC. So you're going to file a Schedule C on your tax return, which makes so that you have to pay self-employment tax. So in order to save for that, I always tell my clients to take maybe 20% of whatever money comes in, put that into your savings account. Take the money that you're given from your client and deposit the whole check into the bank account. Take 20%, 25% of that and transfer it over to a savings account so that you have money put away for taxes. Try not to spend it and just out of sight, out of mind, so that when it's time to pay your estimated taxes, you will have money put away to do that. So also watch for bank fees. The banks also play games and are trying to get new customers. So develop a relationship with a bank where you won't have tons of fees and you will have easy access to make deposits, maybe remote deposit, and also that you can pay your bills online via check or wire and that you won't be charged a lot for those. So shop your bank just like you would shop any other vendor.
Great stuff. So what's next for us?
You want to use accounting software that will enable you to be able to track your income, expenses, payables, and receivables, and you want to have it set up properly. Our company does this for our clients because the opportunity cost for our clients is they would much rather be out making sales and generating revenue than sitting behind a desk and doing bookkeeping. But the bookkeeping is the necessary evil of every business. So it's really important to use software. Just because it's advertised on the TV as really easy to use doesn't mean that it's easy to use and that you won't be making errors. So definitely have a professional set up that software and make sure you're using it properly. My favorite client is the one who tells me when they come to see us that they've got this, their stuff is in great shape. That's usually a sign that they've got a mess and they have no idea, because the way that software defaults to different accounts, if you don't know that, you can have some major errors in your accounting. Also, just because things download doesn't mean that it comes in properly. We have clients who have downloaded the same information 4 or 5 times and they can't understand why their numbers look so goofy. So it's just really important to understand the software if you're going to be doing it yourself, or pay a professional to set it up and to manage it for you so you always have good, accurate information to run your business. business.
Tremendous. You know, Sue, this has been such a gold mine of information and insights you've shared here. If you're going to sum this up, what would the bottom line be for our viewers?
The bottom line is that you cannot commingle your business and personal expenses and income. For example, when you get paid from your customer, put the entire check into the bank. Don't make a withdrawal from that until you have put the money into the bank, because this will give you a great audit trail and will allow you to know how much you're really making when it comes time to do your taxes and to make decisions for your business. And the other problem that you see with a small business owner is sometimes they bleed their business in order to fund their personal life. You have to be very careful that you know how both run and what your expenses are in both, because you can't go out and buy the Jaguar on the personal side if the business isn't making any money. You're going to end up bleeding the business and then bankrupting yourself personally as well. So be very careful. That's why it's really important to go ahead and keep track of your business revenue and expenses and your personal revenue and expenses. You'll see that what you think you spend in groceries is probably not your reality. And if you are starting a small business, you may have to eat macaroni and cheese every night for a while. So you definitely want to make sure you can cover your personal expenses while you're growing and getting your business up and running. And after your business is up and running, you also want to make sure that you're putting money away for retirement, you're saving for education or other things that are important to you, or for taking vacations, and that you're managing cash flow on both sides of the coin, the business and the personal. Because if both are well in balance, then you will have success. If one gets out of balance, it will probably put the other out of balance. And that will just lead to stress, frustration, and sometimes the health and wellness of you, yourself, and your business.
And you know, people often see this as the kind of the discipline that isn't kind of cool or sexy or exciting to them because they're all kind of full of the entrepreneurial dream. But actually, if they took to heart what you just taught in one sentence, there'd be a way to describe the transformational effect it would have on their life and their business, wouldn't it?
Yes, it's really, really important to manage and be accountable to both your personal and your business. Treat your personal life like you would treat your business so that you know what's coming in and what's going out, and it'll make you more responsible on both sides.
And then you can actually enjoy the fruits of your labor with a lot more abundance and, dare we say, enjoyment, right?
Correct. And it also, my whole mantra in life is you want to have as less stress as possible. So how do you have less stress? You live your life more proactively than reactively, and you make yourself accountable so that you know that you've empowered yourself to have the knowledge of, this is what my business is doing, this is how I'm doing personally, what do I need to modify to make both strong and healthy.
Fabulous. Sue, thank you so much for this. And, you know, we would just end this video by saying, these insights can change your life, literally. And so if this is the sort of change you want to see, the healthy business and personal finances where you don't have to stress over them, then there are more videos where this came from, and we would love to see you on those, wouldn't we, Sue?
Yes, we would. We are happy to help. We are here to help clients, to educate them, to make them better business owners. And we have no emotion. We have no skin in the game. So we're here just to tell you the truth. If you pay us, you don't pay us for us to tell you what you want to hear. We're going to tell you what you need to hear. And this happened this week. I had a client come in who owned a hair salon, and I told her that she's not going to make it unless she cuts people. Her payroll was way too high for the amount of business that she was doing. And the one person she really needed to stop paying and maybe go get a job was herself. So we had this difficult conversation, and she is now working on lowering her payroll and doing other things to bring more business into her shop. But those are tough decisions to make. And it's hard to sit across the table from someone and say, you've got a choice. You need to make a change or you're going out of business. But those are what you need to hear, and you need to hear it sooner than later. So that's important in running a business. You've got to be able to have advisors who can look at your numbers without emotion and tell you, this is what's happening and this is what you need to do to be better.
Fantastic. Thank you so much, Sue. This has been tremendous.